Welcome back, traders. How are we doing today? We have an absolute banger going over ticker symbol AMC. And what I wanted to start with, guys, was a tweet only a couple of hours ago by Adam Aron, CEO of AMC, going over in our new cooperation with Netflix. AMC is delighted to be showing quite the special event at 200 of our U.S. theaters. The season finale of the much acclaimed Stranger Things on New Year's Eve and New Year's Day. Tickets are free. Free when you also purchase $20 per guest food and beverage vouchers. Good on the day of the show. So this is actually really huge, and I'll tell you why, because it's a visitation driver. I personally do not like Stranger Things whatsoever, but I know a lot of people who do. It's one of the most popular streaming shows ever. And what I will say is, this is the route that AMC needs to continue to do to not only ramp up their average ticket, which is that $20 for free tickets, right? And hopefully that gives them the opportunity to use their new products, right? There are a lot of their new food and beverages are their own. And what gives them that opportunity is them doing it themselves ups the margin of that product. So if they can up the volume and the turnover of that product, they are inevitably going to help themselves bring traffic back to theaters. I personally really like this as a play on visitation. And I'm seeing a lot of people talk in the comments already about how exciting it is. Theaters are already packed to the brim, already full, right? 6 hours ago, it was full the friggin' hour that it dropped. And you used to see this a lot more often with TV shows like Lost, TV shows like The Walking Dead, right? So I'm glad that this is coming back. This is awesome in my opinion. And when you look at the chart, that's Jimmy Warrants. When you look at the chart, you are doing exactly what we laid out and one of the scenarios for you to do. And it's fascinating to see because we talked about, right, the three touches or the touches of your third touch of this trend line, right? 1, 2, 3, fourth touch of this trend line, and creating that bullish divergence on the weekly RSI, guys. And although this is not hopium, this is not we're going to the moon tomorrow, this is the exact same setup that you had back here, right? You made a lower low in price. That's what this trend line is, and that's what this trend line is. Meanwhile, your RSI, guys, your relative strength index, continued to climb and climb and climb until you saw the rocket ship blast off, guys. And so it may not happen today, it might not happen tomorrow, it might not happen at all, right? It's not financial advice, but this does look kind of interesting for a bottoming formation that you have this macro falling wedge, potentially squeezing all the way into $2, right? While having lower lows and higher lows in the RSI. It looks really good in my opinion. And what we're going to be watching here on the RSI is how you can react to one of my favorite indicators, the weekly RSI band. As you can see, not on the GME warrant shares, but on GME, guys, you have gotten, ooh, that's Weeble. That looks really nice on GME. Oh my goodness. Let's pull up GME on TradingView. On Weeble, you just got that cross back above the trading band, and every single time, right? Back in March, back in September, back in, I think this is October. I know the dates so well. Back in October, right? You saw a significant markup from the crossing of that band. So that's what we're watching on AMC. We're watching for a crossing of the weekly band, guys. But I am so excited about this news that Adam Aron has dropped. And what a place to find a rejection, right? Right at the 4-hour, 200-day EMA and right at your previous support, guys. So you're now seeing previous support. Whoop. That's crazy. That's crazy. Crazy. Now seeing previous support flip to new resistance. So it's not an ideal sign, but this is what we talked about being the most likely scenario, that you come back up here to this neckline, and we'll draw that neckline. That neckline sitting approximately at around 250, guys. 250 is the mark to beat. So let's get rid of that trend line. If you can find the courage, find the mustard, right? The muster to hold this 4 hour 50-day EMA after filling the gap, of course, and create this macro inverse head and shoulders. Shoulder, head, shoulder, and then hopefully, right, see that markup, which would be the bottom here to the neckline, pretty much exactly 50-cent move from the neckline break. And what does that do on AMC, right? That takes you outside. Let's just go to the daily. That takes you outside of your daily falling wedge. That takes you above your resistance. And even more importantly, guys, that takes you pretty much exactly, depending on where you break this thing, into the 200-day EMA for the first test, guys. The first test of your lagging indicator. One of the most important ones since all the way back here in the squeeze of May 2024. You saw a perfect rejection off of the 200-day EMA. And what will inevitably down the road become one of the most important things on this entire chart, guys, in my opinion, not financial advice, is going to be getting back above the 50 on the daily time frame, sitting currently at 254, right around where you saw that rejection, getting above that 50-day EMA, getting above the 200, sitting at 316, and inevitably causing a golden cross on the daily time frame for the first time, guys, since February 1st of 2021. Now you saw this. What I'd like to see is price find a base somewhere around this previous support and now new resistance, right? Kind of lag up here. Above the 200, give the 50 time to slope up, right, and catch up, get that golden cross, and boom, off to the races. But that is not guaranteed. If this is a bottom, if this is your absolute bottom, that is the kind of spring type move I am watching for, and I'm watching even closer at the volume. The volume profile, you saw a super low day after this ramp up of green volume. What I don't like is you had a ramp up of red volume today. So you want to concisely bring that to an end by bouncing off of the 9-day EMA. You closed quite literally right on top of it. In fact, you closed, what is that? You closed at the same value. So you literally closed right on top of it, guys. So holding that 9-day EMA and flipping it like we talked about, because this has been a steady just rejection all the way down till you broke it, retested it, and now you have that opportunity to go into the 50. So fascinating stuff. AMC is already up 1.3% off of the positive news in overnight trading. And the broader market, IWM, seeing a little bit of a cool down here as expected on lower volumes. So what we're going to be waiting for is that bullish continuation. I still think it looks insane, guys. You can see here this weekly candle engulfed, not just one. It's not just a bullish engulfing, not just 2, 3, and almost 4 weekly candles on your risk assets basket, the Russell 2000. So I'm looking for a slight pause going into the rate cut FOMC meeting, which occurs, guys, when is FOMC? This is going to be important. It's going to be very, very important. It's scheduled December 9th to 10th. And what we're anticipating, in my opinion, is rate cuts of 20 or 0.25 basis point cut, which would bring, hopefully, fingers crossed, more liquidity into the stock market. All right, GameStop. GameStop looking very, very nice. Seeing a doji, right, off of your test that we had talked about making the test of, which is your very recent support, tapping at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times. This is your 14th tap of this trend, guys. And you close right below. You close with a doji candle, showing some indecision here. But what I will say that is inherently a very bullish thing, ladies and gentlemen, is you closed after wicking off of the 50-day EMA. You closed above the cooked trend line. So for me, this is really getting kind of crazy here, that you've created this very similar U-shaped fake out below the trend line. And what you have now is you have a gap sitting at approximately 2183. So I do think you're going to fill that gap at some point. I don't know when, though, because currently what you have is the 9-day EMA on the daily time frame freaking running, right, full speed ahead towards the 50. And typically when you see this slice through, you're showing that the short-term trend is bullish, guys. And not only do you have GameStop up on the day, you have the warrants continuing, guys, to rip up 10% again between the day trading and after hours, up as much as 4%. So this is beginning to get a little out of hand on GameStop, and I'm curious to see how it ends, because you always see these runs off of explosions. One scenario here is you take a breather, you make this inverse head and shoulders, or you continue to consolidate along this Work trend line before you finally break back in. The third scenario that I think is potentially likely if you see the markets take a breather here is a falling wedge scenario in which you see this rejection, or you see a rejection up here off of this third tap of the resistance, new resistance, and you come down and you make a bullishly divergent lower low, but a higher low on the RSI. So what would that look like, right? You come down and you make your low somewhere down here, right? And maybe it's elongated. But what that would inevitably look like if it was bullishly divergent is you make this higher low on the RSI. For me, that triggers a strong buying opportunity, not financial advice, to then get into the stock and ride this bad boy all the way up. But regardless of what happens, guys, be careful, do your own due diligence, and in my opinion, the best is yet to come. I know I say that all the time, but that's what I got today for a DD quick daily update on our favorite meme stocks. God bless each and every single one of you guys. We're at 1,030 subscribers, guys. Feels like just yesterday, 3 days ago, we were at 1,000. So thank you guys. Slap the sub button. And remember, the best is yet to come, guys. God bless.